What's going on, everyone? Happy Thursday. We got a lot to talk about today. Just want to show you guys some of the main indices for today, how they performed, and also want to talk about Cathie Wood from an interesting article that I did find on Yahoo Finance. So just to start off, please consider hitting the like button for the YouTube algorithm, and please consider subscribing because it really means a lot. And with that being said, let's get right into the news. So first of all the major indices were down today, obviously except for the Russell 2000, but the three major ones, the S&P 500, Dow Jones Industrial Average, and the NASDAQ Composite were all down today. As we can see, S&P was down 0.3%, the Dow down 0.25%, and the NASDAQ down 0.16%. Of course, this isn't very good. Obviously, we want to see the Santa rally come into play here, but we do have one more trading day for the year, which could end up seeing some upside. We could see a nice green day tomorrow, so we will see what happens with that. With that being said, let's get into the Cathie Wood article from Yahoo Finance. So here it says Cathie Wood was put to the test in 2021, and next year won't be any easier. That's completely true. Cathie Wood, for those of you that don't know, is a very controversial investor. She's known for investing in companies like Zoom and Tesla, and essentially controversial companies that have had either major growth or have had tremendous loss this year. So as we can see right here, her ETF, or her main ETF, ARKK, or ARK Innovation, is poised to end 2021 down by nearly 25%, all while the S&P 500 is up by about the same amount. Obviously, this is pretty crazy, and many people aren't happy with this. I myself was invested in ARK a couple of months ago. I ended up pulling out to get about 10% gains, so this was not too bad for me, but her investors are obviously upset about that because of this situation. So as you can see right here, despite a year marked by underperformance, Wood is keeping pace with the disruptive innovation strategy that positioned her as a bull market poster child last year after her allocations to the so-called stay-at-home picks that benefited from COVID-19 lockdowns earned her an annual return of 150%. So obviously, because of these gains, people did trust her and they thought that she was obviously a genius. But in the bull market, essentially anyone is considered a genius. You could pick a random stock in a bull market, you could shoot up, and then you could consider yourself a genius, even though you might not be as smart as you think. So a little bit more with that. For now, it's ARK that seems to be in harm's way. Wood promised the strategy would deliver a 40% compound annual rate of return during the next 5 years, a projection she later tweaked to a lower, however still lofty 30-40% after criticism of her statement. For those of you that don't know, this number is outrageous. That is not possible. If any fund can do it, I think that they would be the only existing fund on the market. You will definitely not see a single ETF that will return anywhere from 30 to 40% consistently over a 5-year period. That is just simply impossible. And if she really did know how to do that, then I don't know why she would be managing other people's money. She would just do it on her own and then make herself millions of dollars with her own money. So, don't take this information to heart. It's definitely not true. It's not going to happen. Obviously, I could be wrong, and ARK could have gains of 40% annually at a consistent rate over the next 5 years, but who really knows? No one knows what's going to happen in the market. But as far as that goes, this is it's a crazy number, and it probably won't happen. So if we keep going down, we can see kind of what she's been saying. She's obviously in a lot of innovation stocks. We know that, like I mentioned before, Zoom and Tesla. But as we can see here, Wood points to Zoom, Teladoc Health, and DocuSign, three of her picks whose prices have plunged 43%, 53%, and 29% respectively this past year as examples of stocks that will soon outperform. So obviously these companies have not done very well this year. Zoom has increased tremendously since COVID began, and at the same time, it's also fallen from its highs. Same with Teladoc and DocuSign. DocuSign has had a rough couple of months and weeks, given that the stock pretty much crashed. So we keep going here. Here's the 2021 performance of ARK Innovation ETF's top holdings. So these are the stocks that it has the most of. So right now we have Tesla, obviously the 50% increase, but who really knows what's going to happen with Tesla? It's about 7.75% of its earnings, or 7.75% of total holdings. And then here are the other total holdings. And as we can see, the majority of the total holdings have not had a good year. Unity's pretty flat. Only down about 4.81%, but everything else is down, 30, 52, 43, 24, 20, 40. So obviously this is not good for Cathie Wood and anyone invested in her ETF. And right here we have Intellia Therapeutics, 133% gain. That can happen to anyone. It's a very rare occurrence, but anyone can essentially pick a pharmaceutical company that could shoot up like this. They just have to get lucky or have insider information. Not saying she has insider information, but obviously this is a good win for her. But unfortunately, the majority of her picks have not been doing too well. And if we keep going down the article, we can see right here another part of the article, a bigger asset base, but the success of Wood's vision depends on who you ask. While some may laud her active shoot for the stars approach, others are more wary of her ability to assess risk. Obviously, Like I said before, she's a very controversial investor. She does pick a lot of stocks based on innovation and how she thinks those companies are going to perform in, you know, a 10 to 20 year range. And obviously, this is a very this is obviously a very high risk approach to investing in the stock market, because a lot of these companies don't have strong financials right now, but they are promising them in the future. And obviously, that's, you know, no one can predict the future, so who knows what's going to happen. So you're pretty much either with Cathie Wood or against her. People who are more obsessed with risk management would probably side against her, because she doesn't seem to care about risk that much, given that she does pour a lot of money into these, you know, not ridiculous companies, but highly volatile companies. And so if you keep going down, given her controversy, we can see right here, Wood has doubled down on her stance that she can do just that, shrugging off losses, dismissing fears of a bubble, even if it stands to be tested by the sell-off of high-growth tech stocks, likely to be worse than next year if the Federal Reserve acts on expectations to raise interest rates as many as 3 times, making such companies particularly vulnerable. So as we said before, her plays are generally risky, very high volatile, but at the same time, with high risk comes high reward. So all of her picks might shoot up and she might make a lot of money, might make a lot of other people a lot of money, but at the same time, her stocks can continue to plunge. She might pull out, she might invest in safer companies, but who's to say? She's very controversial investor, and her stock picks are completely up to her. So with that being said, thanks for watching the video. Definitely do more research into ARK Invest. It's an interesting ETF, but I highly recommend checking out the other ETFs that they do have. They don't only have the innovation ETF, they have a couple other ones in some other risky and volatile industries, but it is something interesting that I would take a look at. Hope you enjoyed the video, and I will see you guys next time.